We've entered into a scenario in the uranium business that is now driven purely on supply-demand fundamentals. We've never really had that historically because there's always been significant secondary supply in the market. In the very near term, in between now and the end of the decade, the majority of pounds under contract become uncovered. And so we're also entering into a significant contracting cycle. We're entering into a contracting cycle within a period of time where there's limited secondary supply. There's immobile inventories. So obviously there is inventory out there, but largely it's immobile. And the risk on a supply-demand perspective, there's supply scarcity and there's supply uncertainty.
Welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today we are covering Atha Energy Corp, a uranium exploration company with assets in best best jurisdictions. And I'm glad to have their CEO, Troy Boisjoli, back to my show. Troy, as always, good to see you again. I always enjoy our sessions.
Yeah, likewise. I really appreciate the opportunity to be back on with you.
Thank you very much. Troy, let's kick off with your view of the uranium market. M&A speeding up, as it seems, stocks picking up steam as well. Long-term prices are up, but the spot is pretty quiet. What do you think? Why is that? And how do you see actually market going in 2025?
Yeah, let's just start off with the fundamentals. I think the fundamentals right now have never been as strong as they are currently. And I think in my mind, there's three key points for that. One is that we've entered into a scenario in the uranium business that is now driven purely on supply-demand fundamentals. We've never really had that historically because there's always been significant secondary supply in the market. In the very near term, in between now and the end of the decade, the majority of pounds under contract become uncovered. And so we're also entering into a significant contracting cycle. We're entering into a contracting cycle within a period of time where there's limited secondary supply. There's immobile inventories. So obviously there is inventory out there, but largely it's immobile. And the risk on a supply-demand perspective, there's supply scarcity and there's supply uncertainty and there's supply-side risk. So for the duration of the uranium business, we've never actually had a situation fundamentally shape up like this. And so as a function of that, I believe that there's significant asymmetry to the upside then in the price of uranium, spot price and term price.
Yeah, you got that right. Let's cover your projects, your assets, and let's do that with Angilak, starting with Angilak. I understand that Angilak is your most advanced project with the resources in the ground historically, but I would like to hear from you an update on the works over there and what are the next steps and some timelines for those steps for Angilak.
Sure. So Angilak, just for a refresher, Angilak's a project in Nunavut that we acquired through the acquisition of Latitude Uranium. We bought Latitude for Angilak. We bought it for the upside. There's 43 million pounds there and an average rate of 0.69% U3O8. To contextualize that, that's one of the highest grade uranium resources outside of the Athabasca Basin. Previously in my career, I had the good fortune of working with Cameco at the Rabbit Lake operation. The remaining resources at Eagle Point are at 0.7. So you've got Angilak 0.69, 0.7, same. So fantastic base. But what we liked about it and why we acquired it is for the upside. We saw a significant resource growth opportunity there. One within the footprint of LAC 50. So LAC 50 is a deposit. LAC 50 is unconstrained. It's unconstrained at depth. It's unconstrained on strike. It's unconstrained in the hanging wall, in the footwall. So 360, and we like that, obviously. But what we also recognized was a significant metal endowment, or what we view as being a significant metal endowment outside of the existing trend of the LAC 50 resource. So that brings us into our work plan in 2024. We just came off of a 25 hole, just over 10,000 meter drill program that was exclusively focused on expansion. We didn't do one infill drill hole. It was all expansion work with the objective of materially expanding the envelope of mineralization at LAC 50. And we were able to achieve that. 25 holes, every hole achieved their objective. We're currently in the stage right now. We've had assays in since early September. So we're getting weekly updates from the lab for assays returning back. So we're at a stage now where, within the near term, call it, we expect to have assay results back to be able to communicate those results in full to the market. But what the drill program this year achieved is it allowed us to have a look through on the resource growth and de-risk that future resource growth stage. So going from 43 million pounds, testing a broad envelope of rock, adding multiple new mineralized corridors over and above LAC 50, LAC 48, LAC 50, LAC 52, LAC 54. Now with a setup with a project that has a de-risk path forward to significant resource growth.
Okay, after you finish this exploration work at Angilak, how much closer actually are you to moving historical resources estimates to present resource category? Or what work you have to done before doing that?
Yeah, we won't be updating, and the reason for that is it's the classification of historic resource. The bulk of the work was done here in just right after post Fukushima. Okay, so it's done 2011, 2012, 2013. This resource went from 14 million pounds to 27 to 43. Another reason we liked it in the very steep part of that resource growth curve, year over year over year. But the point is that it's very modern and up to date drill data. We have the core, etc. Both myself in technical roles as I was coming up through the industry, spent a lot of time doing mineral resource work. Our vice president of exploration, Cliff Revering, was within Cameco's mineral resource management team prior to being the chief geologist at Cigar Lake. After that, he was a principal geostatistician, geoscience scientist with SRK. My point being that we understand the resource, we're comfortable with the resource. Our critical path doesn't go through updating from historic to present. Our critical path goes through resource growth. And when we grow the resource, when we come out with a fuller scale resource update, which includes and captures the growth opportunities that we see and that we're targeting, we'll update it at that time.
Okay. With this exploration program, have you got any new techniques, some modern techniques of exploration? I mean, specifically AI help. Did you deal with that?
It's interesting because within the broader portfolio, yes, at Angilak specific, no. And the reason for that is, we've got drill resolution and it comes down to fundamentals. You look at oriented core, you take detailed structural measurements, guided then by geophysics, etc., and very up-to-date 3D geologic modeling. And when you're within the resolution of geophysics, when you're within the resolution of AI, based off of ground truth geologic models, you let the geology steer you. At a regional scale, though, as you're aware, we have I believe the largest exploration portfolio in the Canadian uranium industry, with about 8.5 million acres across the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. We also have a data scientist on staff that focuses on machine learning applications as it relates to exploration and resource exploration. And so, yeah, from a big data science perspective, and a big data perspective, yeah, we're utilizing very modern techniques that allow us to then parameterize the exploration process. And you look at the parameters, you capture that within a machine learning process, helps you build prospectivity models, probability models as it relates to more generative greenfields exploration.
Have you and your team already discussed the exploration plans for 2025 with priority targets on Angilak?
That's coming. That's in the phases. Obviously, assay results back are key to that. Assay back from Angilak. At the same time, we have a drill program going on at Gemini. Gemini is a post-discovery project on the eastern edge of the Athabasca Basin, an advanced exploration project, and we're drilling there right now. So, and then in parallel to that, we've also completed a significant amount of generative work this year. And when I say generative, I mean on our greenfields projects, advancing them forward to a target ready stage. And so when you think about the prongs of our current business and how we invest in our assets, it goes from Angilak, then it goes into our more advanced exploration projects, and then our generative tail of projects. And where we're at right now is compiling data, assessing, prioritizing, and then from there we'll be able to action out our 2025 plans. With that being said, our philosophy to date has been aggressive growth. In year one, we started off with 3.5 million acres of exploration property. By this, a year removed from that, we acquired two other exploration companies, secured 3 million acres of exploration property in the Thelon Basin, executed those transactions, are in the process right now of deploying one of the largest exploration budgets in the business, which is around $30 million in exploration expenditure into the ground. And so rest assured, with the backdrop of this uranium macro environment that's never been better, we intend to aggressively grow with a measured risk approach.
So, you mentioned Gemini exploration is underway. So do you expect assays after Angilak or in the same time approximately?
No, they'd be after for sure. You look at the lab lead times, it's first in the queue, first in, first out, right? And so we've got assays from Angilak at the lab, that'll be followed by Gemini after that. Typically, what we're seeing right now is, we're seeing turnaround times in that kind of 6 to 10 week time envelope for processing times at the lab. Now, that'll fluctuate, obviously, depending on, I expect them to slow down and get through the bulk of the work that they need to get done through the fall. So that could be sooner, but expect those timelines.
You have a lot of properties. I will not ask you specifically all of them, but tell me what is your focus and what other exploration programs are currently underway?
Yeah, so we've done geophysics across the Thelon Basin. Maybe I'll just give a broad scale overview of the Thelon Basin for a second. That's a large Paleoproterozoic basin that straddles the border between Nunavut and the Northwest Territories in Canada. It's a direct analog to the Athabasca Basin. It is a mineralized jurisdiction. You have Orano. Most of your listeners will be familiar with Orano, obviously. They have the Kigavik project there. It's about 127 million pound project at about 0.55%, went through to a feasibility stage in the last cycle. But to my point, the biggest difference between the Athabasca Basin and the Thelon Basin is that the Thelon historically has been very much underexplored. So the right setting, right characteristics, right geology, but in combination with being very underexplored, we like that as an opportunity set, which is why we've been I would say aggressive as we have been in the Thelon Basin with being the largest exploration tenement holder there. We've executed geophysics there, so we're processing results right now. We'll be able to communicate some of those targets that are being generated out of that work between now and the end of the year. Also, between now and the end of the year, we've done a vast amount of geophysics within the Athabasca Basin on our earlier stage generative projects. And the intention there is to build up a very robust, large pipeline of high probability, high priority targets. And when you think about it from a 50,000 foot view, we have the largest land position in the Athabasca Basin. And our objective is to distill the highest probability, highest priority exploration targets from the largest land position in what most consider the best uranium jurisdiction in the world. So we like how those things stack up, and we're in the process of doing that right now.
Yeah, attention definitely with the exploration, but some say that it's too expensive to go to drill there and have exploration programs. Is that true? I mean, if you can give me more color on the pricing, cost of exploration, let's say in the Athabasca, in Tilon, in Nunavut, if you can give me some color on that.
Yeah, absolutely. So it's interesting, right? When you think about cost, and it's true, it's remote, and there's a function of cost that comes with working in remote areas. A lot of that cost is actually a function of fixed cost. So you have the fixed cost on a project, and then you have your direct or variable cost, which is a function of the work that you're doing. So the number one thing that you can do to help mitigate and control costs within that environment is do more work. Do more work over your fixed costs, and then you drive your fixed costs relative to your overall cost down, and just drive efficiency into your programs. And so, but to directly answer your question, the best that we've ever done, or I've ever done personally within a uranium exploration program, and I'm talking about at scale, say scaled up to 10 drills, 12 drills within the Athabasca Basin operating at once, 70 to 90,000 meters per annum, is in that, I'll give you a range, in that $330 to $350 a meter range. Okay. Greenfields exploration in the basin is higher than that. Typically, if you're doing a small drill program, you're in the 500 plus meter or dollars per meter range. At Angilak this year, what we did was we backed out, we moved in two new drills to increase our productivity factors, drive our costs down. And we have a cost basis now at Angilak that is very comparable to the Athabasca Basin on a per meter basis. It's in and around $600 a meter, which when you think about that, is very competitive. And then the other thing that you have to consider when you think about exploration is, cost per meter is a bit of a red herring when it comes to a metric. It's actually cost per target. If you're drilling a target that's at 800 meters depth, your cost per meter is really irrelevant. It's actually your cost per target. And so when you're looking at exploring in shallow jurisdictions, where on average your drill holes are sub 400 meters, it becomes very efficient to drill and explore at shallower depths.
That makes sense. You recently signed option agreements with Terra Uranium, I believe, for some of your projects. Is that the beginning of more aggressive approach to a prospect generator model?
Yeah, it's interesting because I think you talk about prospect generator and you generally get a sense of that's a group's business in and of itself. That is a function of our overall strategy. And really what that part of our strategy is about, when you look at the size and scale of our exploration portfolio, I mentioned we're doing a bunch of work to mature the properties. We're ranking, order, prioritizing. We will drive exploration through, call it the near-term projects, the projects that are within our exploration timeline that are out, 12, 24, 36 months. Things that are in a timeline beyond that, we'll look to pull that value forward for investors and maximize exploration and discovery potential through farm out agreements. And really, it's about maximizing exposure to discovery within a single portfolio and pulling value forward. And so it's not so much that we have a business model that is based off of a project generator model. It's that we're looking to pull value forward, maximize value for shareholders.
Uh, this year's exploration budget, if I'm not mistaken, was around $30 million. How much did you spend so far, and what is left from that budget actually?
Yeah, we're about 80% through that. That goes through the generative work that we've done. I'll give you a breakdown of that. Okay, so there's about 40 to 45% of that budget that was allocated to Angilak. Okay. Then about 25 to 30% that's being allocated to Gemini, which is another advanced stage drill ready project that we're drilling currently. And then the remainder is in the generative side. So we're quite a ways through that. We've had very good results at Angilak. We have a bunch of generative work that we're also doing in parallel to that. And so then you look at what that means from now until kind of the end of the year. And we've only had the opportunity to release results from Angilak, and those have been radiometric results. So we're back end weighted in terms of the results coming to market this year, which we like, and favorably and fortunately, it aligns very well with the uranium market that obviously over the last month has gained significant traction again, and one in which the macro sentiment has never been better. So we like the timing of that.
What is your current cash position for the company?
Yeah, so we started off the year on a pro forma basis across the three at about $60 million. We'll spend 30 on exploration. We'll end off the year in that range with a healthy cash balance, in that 20 million plus range, which obviously gives us significant runway to continue to explore, continue to do work, etc. And that's the basis of what we're doing at Atha. Make sure that we have a sound business model, managing capital as we're putting into the ground, and really focusing on advancing and materially advancing the projects that we have under management with the dollars that we have on the balance sheet.
I want to touch a little bit on that capital side. You have a very strong technical team and the uranium development experience from Chemical, NextGen, ISO Energy. You were personally in NextGen for, I believe, more than 5 years. But how are you covered from the financial capital side? Who are the people that covered that part of the story?
Yeah, so obviously in the role I'm in, that's a big part of my job right now. But I lean heavily on our team that has a depth of experience there. Our chairman, Mike Castano, he's a guy, founder chairman. They raised about $43 million into the deal on listing in what many would consider a challenging capital market at that point in time. From there, we've raised about $55 million into the deal directly into Atha over the course of about 18 months. I'm supported by our Senior Vice President of Business Development on a day-to-day basis. Ryan Gaffney, he spent 20 plus years in the capital markets, was a senior investment banker at Canaccord for a large number of those years based out of London. So on the capital market side, and access to capital, that is part of the company that, as a technical guy with a technical background, I appreciate internally with the strength of our organization, because obviously there's two sides of it. It's advancing projects forward technically, and then the market side and the capital market side is equally, if not more important. And so, I believe we layer strength on strength on both sides of that equation.
Great. How is your share registry looking today? How heavy are you actually on funds and institutions? How much is retail? I mean, my main question is the big boys. You're an exploration company, let's face it. So how are they looking at that fact and provide you with more money?
Yeah, so I'll give you a breakdown of our cap table, maybe. That'll help. And then, it's kind of two questions. One is the current cap table, and two is access to capital. And where we sit right now, we have a new company. That's one of the advantages of Atha, in my mind. We were listed in 2023, April 11th, 2023. We've got about 24% insider and founder ownership, about 27%, in that range, institutional ownership. All of the dollars at a dollar round have came either institutionally or through strategic investors, strategic being Mega Uranium and ISO Energy, who participated in our last round. And you look at the appetite to invest in uranium projects, particularly in uranium companies with a profile like we have, and it's high. It's high. The access to capital, I believe, is strong. And that bodes well for being able to aggressively advance projects in this cycle and become more and more relevant in this cycle to this uranium cycle.
Okay, with plans for the next period, let's say, when do you expect you will have to do another raise? Do you know approximately?
Yeah, so that's a function of work, right? We've got a strong balance sheet. We maintain a strong balance sheet, and that's a key part of our strategy. And it's really a function of how aggressive we will be in the coming years. And that's driven off of capital market sentiment, and that's also driven off macroeconomics within the uranium space. The one is looking exceptional right now from a macro perspective within the uranium market. However, there's still a lag and there's still a bit of a disconnect between and you're across multiple commodities, and this is not unique to uranium. You look gold, you look other commodities where obviously at a commodity level it's very, very bullish, and then that has not yet translated down into the equity space. Same is true in uranium. And so we look at that actually very opportunistically for people that are interested in the uranium space right now. There's an opportunity here where, the macro sentiments like this and trailing that kind of significantly right now, there's a value gap there, a wedge gap there, in our opinion, between the underlying equity performance. And so that's an opportunity, but that's also a function of how Atha was built. It was built to, withstand quarterly and volatility within the capital markets and continue to execute on our strategies at a point in time when, quite frankly, you can add the most value. And that's what we're doing.
Yeah, definitely agreed on the disconnect. Precious metals, uranium, there is a disconnect, definitely. Troy, final question. News flow from the company. What and when can investors expect, let's say in the next few months? What kind of news flow and when from the company?
Yeah, again, going back to one of the largest exploration programs in the sector, the amount of news flow that we've put out thus far from that program has been two drill releases with radiometrics from Angilak. So the bulk of that will continue to come throughout the remainder of this year and into next. In the very near term, what we're excited about is the assays coming back from Angilak, and moreover the opportunity to be able to communicate the potential that we see in the project in terms of the resource growth potential based off of the results that we have in hand already, that we have drill holes into the ground on in those areas where, as I mentioned at the start, we see a tremendous opportunity for de-risked resource growth.
This was Atha Energy CEO Troy. Thank you for coming to my show. Great chat, and I wish you luck.
Thank you very much. Appreciate being with you.